I didn't print mine out. Is that okay?
Everybody see this uniform residential loan application? Is it large
Yeah.
enough?
Yes.
All right.
Yes.
Okay. So I'm gonna go ahead and get started.
My lawyer is paying her lawyer. But he had them sign documents with that specific power of attorney so that he can collect their check. I told my sister, you don't need that lawyer to collect your check.
Hold on. Mute everyone.
Well, my sister is a crook.
Your phone. Hey, go. All right, guys. Welcome to your training. Welcome to your success. I'm very proud of each and every one of you for showing up. Wanted to say that. That's the first thing. You got to show up for yourself, right? So I'm gonna go over a few housekeeping rules. If anyone on this call if this is your first time on the call, my name is Gloria Simmons. I have been assigned to you as your trainer. On the Own Easy side, I am known as your loan buddy. Once you get over to the bank side, we're your sales manager, your trainer, and we're going to assist you in putting quality loans in your pipeline. Right? I emphasize quality loans. And so we're going to get to what that means. So just a few rules for this call. I'm going to go through the training, write down your questions so we can get through it. We will have a Q&A at the end of the call. Now, on the Q&A here, I will be addressing everything that has to do with this training. I know there are some frustrations going on with regards to your ability to get onto your email, tech issues. That's not what this call is for. Unfortunately, I am not a tech person and I would not be a resource. I sent out some resources to everybody and I have been sending them out to your personal and your bank email just in case you have access to it. And I would advise if you are reaching out, do it early in the day, okay? All righty, so let's go ahead and get started. Now, because the majority of you are brand new, I am taking everybody to the basics. This is what I trained on. This uniform residential loan application you probably saw in your email, where I referred to it as your 1003. It's a 1003 uniform residential loan application. That is what your borrowers are filling out on the POS to some large extent. However, there's a lot of holes missing that I don't want you all to miss. And because you're new, if you learn this every time you talk to someone on the phone, this is what you're going to be using. On its face, it just may look like just some simple data, but I'm going to go over it in a way to where I show you. And I'm also going to put together a Word doc that has questions beyond these questions that you guys need to be answering as we go. All right. So we're going to start out with the basics. Everybody knows their first and last name. So that's the only reason I bring that up is you may be dealing with people who at some point we need to have a copy of their driver's license. If they put Sally Smith, it's usually women. If they put Sally Smith, but their license says Sally Alexander, Houston, there's a problem, and that's going to cause some extra paperwork back and forth from underwriting because we need to identify who you are, and your identification needs to match up, or there needs to be an explanation. So just little things that you need to be asking your clients when you're talking with them. social security number. We may not be dealing with United States citizens, so if they say they have permanent resident alien status, we just need the paperwork. Everything on this loan application is going to be supported by the correct paperwork, and you'll start to see that as I go through this training, what that means. Okay, so types of credit. Now, you may be dealing with someone who's applying that's single, who's applying for individual credit, or someone who's a joint applicant. For every applicant, they need to fill out a separate loan application. You can't just squeeze them all on this one application, okay? Marital status. Now, here is an area where I'm going to spend some time. If you see that they are married, separated, unmarried. The unmarried part is, and the separated part is where we need to start asking questions. If they may not tell you that they are divorced or whatever their relationship status, but usually there's a lot of things that we need to start asking when it comes to divorced individuals, when it comes to alimony and child support. If you're talking to someone, whether it's male or female, and they are under court order or they are paying some form of child support, then we need to have the documentation for that. If someone is receiving child support, here is where it kind of really gets important for you to question them, because hopefully they have it through a court order. If they don't, if someone is saying, well, I'm getting $700 a month in child support, but the ex-spouse shows up with the $700 in cash, we can't use it because we can't track it. It may show up in your bank account, or you may just go straight to the store or do whatever you need to do with the money. But if they are receiving cash, it's very hard for us to substantiate that. So we would not be able to count it unless it's consistently put into a bank account for at least 6-12 months. It might be at the underwriter's discretion, right? However, we do need to be able to track your child support. If we have people who fill out this loan application and they don't indicate that they are paying alimony or child support, but we may see it coming out of their pay stubs, or we may see a specific amount coming out of their checking account. We need to know that up front, because that could blow up what's called their debt to income ratios on the back end. So I'm here because I see this come up a lot, and it changes loan figures, it changes debt to income, depending on if someone was thinking that they were going to be able to use that, for example, child support or even alimony. We need to see it continuous, that it will continue for 3 years. So say they did have a court order for child support, but the child is 16, and according to the support order, the support ends at 18. We can't use it because we need to see a 3-year continuous. It means that beyond year 2, that child will no longer be getting child support. You won't be able to get those proceeds from whoever the ex-spouse is. So again, when you're looking at marital status, and you're filling this out, or they have filled it out and you're reviewing it with them, and they put unmarried, you need to start asking some questions. If they say separated, you need to start asking some questions, okay? Married individuals, they will, you need to find out, will the spouse also be on the loan? If they do, then they need to fill out their own loan application. Contact information. I'm going to speed it up a little bit. Contact information. We need a cell phone and an email that they check regularly, because once someone puts in an application with us, we're going to be sending them information back and forth through that email. It can't be an email where they gave us the one where all their spam goes. Let them know that communication is going to be extremely important as we go through the loan process with them, okay? Current address. Now, this is an important area, because under certain guidelines, say we're looking at FHA, it really is critical that we're able to document that you have 12 months of good paying housing history. So if you own the home, then we're going to pull your credit and we're going to look at your credit, and we need to see that you have been paying your mortgage payment on time for at least 12 months. Okay. Just had a situation where we took the file to a manual underwrite, and that was the linchpin that where we were not able to proceed with that loan, is because when we pulled the mortgage history, they were running about 2 months behind. So of course the banks, if you're asking for a new mortgage, they're going to want to know how are you paying on the previous mortgage. Okay. And so if you have less than 2 years at your current address, then we will definitely need to for you to document that prior housing history. Okay. Now this 1B, this is important. This is probably, I would not say the most important, but income, if you don't have the correct documentation of income, then it's going to be pretty hard to get a loan. This is where I focus a lot of my time when I was previously a mortgage underwriter. The first place, actually the 1003 is the first place that I will go when I get a full package. I'm going to be checking to see what your base is. If you put overtime here, I'm going to write this up for you guys. But overtime, you need to have 2 years of documented overtime on your tax returns. Bonus, same thing. Commission, same thing. So I have files where someone is getting a base income, but they just started getting overtime in the last year, or bonus or commission, or they get commissions every other month, or bonus every other month, or every once in a while they do overtime. When they put this on the loan application, you need to be asking them, how long have you been getting it? Has it been continuous for the last 12 months? And did you file that on your tax returns? Okay. Military entitlements. So as you can see, there's all types of different income depending on who you're going to be sitting with. You need to make sure you put them in the best possible position by asking them all of the types of income that they are getting. So especially if they're looking for a certain loan amount, we need to know what all of their sources of income would be. Now, self-employed, we need to have an entirely different call about self-employed. But if you see that they did check that they are a business owner or self-employed, the biggest hard stop here is when they wrote off. Basically, they told the IRS, I made $150,000 a year. However, I had $130,000 worth of write-off. So as an underwriter, we're going to take that $20,000 that's left, divide that by 12, and that's going to be your income. And everybody knows that's not going to be enough to support a mortgage payment unless you have someone else coming on as a co-borrower. So documentation here is going to be extremely important. We are going to have a separate call on how you deal with self-employed individuals, what type of loans do we have out there for them. But just be very aware, because this could be a hard stop. I have had hard stops with several people over the years where they had to then go the following year. You need to pair them, or they need to be paired with a tax professional that knows how to balance their write-offs so that they can show enough income to purchase the size and scale of home that they want, but just not enough to where they're taking a complete bath with the IRS. Okay? This is an additional area. For example, if you have had started your job, you're going to want to put the additional employment here, because we do need to see 24 months of employment. We need 2 years of stable job history. What does that mean? That means if you have had an employment gap, you have 2 years of history here, but if you had 6 months off, you were working, And you can look at these dates where it says start date. If this start date ended and then by the time you got here and you noticed there was a gap, you need to let them know that they're going to need to write what's called a letter of explanation. And then you need to also kind of ask a few more questions about that, like what happened there, because once you start getting into a year gap, then that starts to look like you have spotty employment. And so you need to just be really good at asking questions. Save your questions to the end. Write them down for me. All right. So this is the same thing that I just spoke about before. You'll need 2 years current and previous employment income. Continuous. We would like to see it continuous. However, if it's not, it can be supported by a good letter of explanation. Things happen. Life happens. People get sick. Sometimes you're taking care of an elderly, parent. So we just need to know what that is, and then we just need to make sure that we're able to document your current employment. Let's go back up and talk about documentation for employment. We're going to be documenting that by pay stubs, by W-2s. If they're working at a small mom and pop, we're probably going to end up sending them a verification. We call it a VOE, a verification of employment. Sometimes we're able to pull that automatically through the work number through Equifax. So you'll see that box on the point of sale system. But a lot of employers are not on Equifax on what we call the work number. So once this information, they can put whatever they want here, but if their documentation doesn't match up to this, I had someone who put that they made $6,800 a month, but when I got their W-2s, it showed $47,000 a year. Everybody knows that math isn't math, and all you have to do is just take it, divide it by 12, and there was a discrepancy. So I'm not sure. Sometimes your borrowers are just putting figures here, but maybe she was trying to include overtime. And so don't let them fill this application out and send it back to you. And then they send the documentation, and then you send that to me. I need you to be looking at what they put on your loan application and see if the documentation makes sense. If not, then you're going to need to go back to them and ask them questions. Right? So, income from other sources. So here we are. We talked about alimony, child support. People have all types of things going on. Foster care, the state is paying their foster parents, so the state is paying for the children for a certain amount. I'm going to put a pin here and talk about foster care. If those kids age out, then we need to know the ages of those kids that they're receiving that income from. If it's not going to be for the next 3 years, if the child is 17, then that means that they will only be getting foster care for another year, generally speaking. I don't know if the states have changed that, but if the child is 7, then we're good. But if that child is 16, 15, then we may not be able to count the foster care payments. So disability, everybody, anything that comes from the IRS or not the IRS, but the state, when it comes to disability and those types of income, they're going to get a statement, an annual statement. So this is 2024. If someone is saying that they received disability, they got a payout statement from the state in reference to how much they will be getting. So these are the types of documentation that go over to the far right. You'll see unemployment benefits. Basically, that's for a seasonal worker. That's the only time that we would even consider someone for a loan if they are a seasonal worker. So we need to see where they worked part of the year through documentation, and then we can count the unemployment benefits, because that's just what was needed to bridge them to the season came back for them to start working. So there's all types of income. We just need, everything needs to be documented. It needs to make sense. And then we would need to calculate the payments, not you and I, but the mortgage underwriter is going to basically confirm the documentation and calculate their income based on that. Right. Now, here is where I see most of the people that are applying for a loan through the point of sale system. They put one or two things here for the liabilities. When I pull credit, there's 15 or 16 things going on. So this is where you're going to need to, because if they are really burdened down with debt, liabilities. I'm going to come back to assets. If they are really burdened down with debt, that's going to be a big problem, because if their income can't support the debt, if their income is $10,000 a month, however, their liabilities come up to $5,000 a month, right off the bat, before we even start adding in the mortgage payment, we're at 50% DTI, which is the max for most loans. In fact, 50% debt to income really doesn't even leave us any room for anything. So that means two things. That means that you need to start asking them, can any of these be paid off? And or do they have a co-borrower? So I'm seeing also a lot of student loans that are in some phase of either deferment or it doesn't show deferred status. That's what I'm seeing. I'm seeing charge-offs that we have to resolve whether or not they're going to be paid off prior to closing. And so I would say my general talk off here is tell people not to get stuck on a certain loan amount that they're shopping for. Because until we start pulling credit, looking and confirming their income, then the loan amount is going to be based on their ability to pay it according to debt to income, and by the time we come up with a housing expense, and the loan amount could decrease. However, I would say if you're talking to someone, don't let them drive the bus and tell you that they want to get approved for a $300,000 loan. You tell them, we're going to pull all of your information together and come back to you with a loan amount, and tell them don't go out shopping. Don't engage a realtor until we come back with a pre-qualification. Actually, we're going to be doing pre-approvals, I'm being told, so that you're sending your buyers out with a realtor knowing that those numbers is something that they can actually afford to pay. Okay, I'm going to go back up to assets. All right. If you look here and someone says, I have a bank account with Navy Federal and I only have $100 in my account, you need to start asking some questions. To me, when I'm talking to someone and they said I have no money, that means at the end of every month with my rent payment is $900 a month. I have all of my other liabilities, and I look here and they're almost in the red. They're just $100. Ask them, is that a true figure that they just put that there? Ask them if they have 401ks. Do they have, are they going to be able to get gift funds? Because it's going to cost them money out of pocket to close on this loan. Every loan, we can source for down payment, but when you start getting into going out with a realtor, they're going to have to come up with a home inspection out of pocket. Please mute your. They're going to have to come up with an appraisal, a credit report. They're going to have to move. And so if I see that they only have $100, then this may not be their season to purchase, because there's still out-of-pocket costs that someone is going to have to pay, even if we find 3.5% down payment and are able to get them that, and we're able to get a certain amount of closing costs from the seller. You still want to put your buyers in the best possible position, because we do have inflation. We have all of these other things that factor in to homeownership, right? When they're moving from a small apartment to a larger house, the utility bills are going to increase. Now, when something breaks, we'll have a home warranty on it. However, there's a higher cost to own a home as opposed to renting. And so we have to be really good at not getting excited about, hey, I'm going to get this person into a home, but we need to also be morally responsible and just really consult with them and find out, is this really the right time for them to be purchasing a home? If they're struggling to make ends meet, a house is going to cost them more than they're renting right now at 7% interest rate, right? So we need to be very, 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 very consultative with our people, because this may not be their season, but you might be able to work on them with getting their credit scores in a better spot. They may need to pay down some of the debt that we talked about before. So this 1003, I gave the analogy in a previous call, is like if you go to the doctor and you have complaints, my side hurts, I've been, nauseated, they're going to draw blood and they're going to probably make you take a urine test, take your blood pressure. This is what this 1003 loan application is. It's going to give you, if they put the correct information on here, it's going to give you a pretty good assessment of their ability to purchase, aside from pulling credit. But if, like I said, if they don't have any money here, you can see that they're really dragged down with liabilities here and they have very little assets. That's going to make me a little bit nervous, and I'm going to start asking a lot more questions to them prior to just, hey, here's my point of sale link. Let's just apply and see what happens. We don't do that here. We're going to consult with them. Everybody on this call, I think you probably got my email to know that until I release you to use your point of sale, this is going to train you. This is going to give you a lot of intel. It's going to really help you understand this business as you understand the data, right? So other liabilities that just talked about, whatever, it gives you several opportunities to tell us if you have other liabilities. As an underwriter, we're going to find out. We're going to be looking at your bank statements. We're going to be looking at so many different reports that where you really are not going to be able to hide debt. And so I'm going to go back to credit for a minute. Usually when I'm talking, not usually, every time I talk to someone, hey, Glo, I want to buy a home. First thing that I ask is, what's your credit like? Oh, it's pretty good. Okay, so I want you to go to Experian and I want you to go to Credit Karma and I want you to give me all three of those scores. When they come back to me with those three scores, it gives me an idea. Now, we pull from a different credit platform. However, it's not going to be a huge swing. So if you're at a 600, a 400, and a 500 on Credit Karma and Experian is going to give you the Experian score. Credit Karma is going to give you TransUnion and Equifax. As soon as they start giving me low scores, then you guys need to stop what you're doing and you need to say, what's dragging your scores down? And you need to just really listen, and then you need to listen to what they're not saying, because they're not going to tell you that I've just charged off a car. I'm barely hanging on with the mortgage that I have. I've been on, a firm, and I, buy here, buy now, pay later, and I never paid them later, and all of those are populating on their credit reports. But you need to maybe do a Zoom call with them and have them show you what's on their credit. And maybe that client is not ready for homeownership, but we definitely are able to put them through our debt cleanse platform, right? So that's the wonderful thing about being with this company, is that you can help them, but there's no shoehorning you into a house if your credit scores are all over the place and it looks like that you have some real issues. I don't know if it's irresponsibility or you had a job loss, you got sick. Everybody has a story, but it is not, you would not be doing them a favor trying to put them through the homeownership process with low credit scores. First of all, they probably will not get approved depending on their credit scores. And second of all, like I said earlier, it might not be responsible for us to put them in a situation to where they're just one situation from a foreclosure. So we have to be really good at talking to them and just bringing them back to reality about their situation and what they may need financial counseling. And we definitely have that available on our platform. Okay. All right. Financial information. This is for people who own real estate currently. Now, this one is a big deal, and I'll tell you the reason why and what I have seen. If someone currently owns a home, we talked about this before, and they're not paying consistently on time every single month for the last 12 months, that to me speaks to some sort of problem that we need to kind of flush out. But say they are paying consistently, credit looks good, income looks good, they have healthy assets. Here's what I have been seeing that's blowing everything up that I need you guys to be aware of. During COVID, there was a lot of COVID relief funds where it came to people who may have gotten behind on their mortgage payment. If they got behind for several months and it ended up being about 30,000, they listened to me clearly here. The mortgage company over the last several years have taken that 30,000, put it to the back of the mortgage, and it was sitting there as a second silent lien with no payment. Then I had a client who not only had that, but maybe about 5 or 6 or 7 years ago, it was an FHA loan, and they got behind on the mortgage, and they were able to do a loan modification. They took the arrears and also put that on the back of the loan as what's called a partial claim. Why is that a problem? Is because usually if they have a house to sell, they're going to probably sell that house and use the proceeds to purchase a new home. If they have a good realtor, that realtor is going to get a mortgage payoff. Follow me here. The mortgage payoff after realtor commissions and closing costs, the realtor is thinking, okay, yeah, we have $100,000 left from the sale of your home that we can transfer over to the purchase of a new home. Then they go out shopping. Then they come back and they're under contract, and then it goes to the closing attorney. The closing attorney runs title, and now there's about $50,000 in liens against that when they get the payoff or when they run title. It's usually going to just be on title. A lot of times the mortgage company is not even aware. Now the $100,000 that they thought that they were going to use for the new purchase became $50,000. That could kill a deal, especially if they went out and shopped for a more expensive home, and now instead of $100,000 that they were going to be able to use, they only have $50,000, and now scrambling trying to make up the difference. And if they can't, then the realtor is going to have to terminate that contract, and we have to start all over. Okay, so I hope all of that made sense, but liens on a current and existing home, it has been a really big thing that I'm seeing over the last several years as we try to get people to the closing table who currently own a home. If they own a home, they're going to need to provide their current mortgage payment coupon. That's how we will assess what their payment, interest, taxes, and insurance is on that home. We need the homeowner's insurance declaration page, the most current, and we need the most current property tax. Those are things that go into the documentation list that you guys have probably gotten. If not, you're going to get of things that we need from your client if they own a home. If they have investment property, it starts to get a lot more complicated. You just need to ask them, have they filed what's called a Schedule E that shows us what they have claimed with the IRS in terms of their income, because usually if it's an investment property, they may be trying to use the monthly income to qualify for a loan. Well, we need to see how you filed your taxes for that income, because there's certain calculations that come out. If you're renting out an investment property for $2,000 a month, generally speaking, we can only use 70% of that, because we have to calculate as mortgage underwriters. I keep saying mortgage underwriters. You're not a mortgage underwriter, but I used to be. But that's where all of your files are going to go. So I want to tell you up front so you're not surprised. 70% of that 2,000 is going to be, what is that, 1,400? And so if they're thinking I'm going to be able to use $2,000 a month, then they're not going to be able to use the full because we have to account for certain expenses. All right. I hope I'm not making your head hurt. But these are the calculations and things as far as what you need to be aware of is to ask the questions. Did you file this against your taxes? You want to use rental income? Do you have documentation for it? That's as deep as you need to get, and then we will, of course, you will have your list of documentation that you need. This is just the additional section in case they own additional property. All right. So here is where you're going to find out from them, is this a first-time home buyer purchase? Is this a second home purchase? Are you refinancing? So we need to know. This loan amount, people are going to put an amount here, and it's usually going to be based on what they want. I guarantee you I've never seen an initial loan application look like the final loan application. It's because these numbers are going to change. We have to start out somewhere, but just because they put, I want a loan amount of 500,000 does not mean that's what they're going to get. You need to never tell them that, yes, we're going to get you a loan for 500,000 because we don't know what they can afford until we start looking at their documentation, right? So they pretty much will know, what they intend to, why they are engaging you as a loan officer. Is this going to be an investment property? Is this primary residence, which means that's where they intend to live? So they're going to let you know. All of these other mixed-use property, manufactured home, you're probably never going to, I won't say you're going to rarely see that, but if it does come up, then we'll hop on a call and, talk to your buyer in terms of what they have in mind for a purchase, right? Other new mortgage loans on a property that you're buying and refinancing. We hope to not see anything here because we would like to not, for you to not go out and create debt to get more debt. And so I usually like to see that does not apply. Rental income on the property you want to purchase, that's if you're getting into a rental income, you may be purchasing, this is for investors. They may be purchasing a 2 to 4 unit that's already fully occupied. This is going to be a matter of paperwork. These are one-offs that we will get on a call and talk about, right? Gifts and grants. Find out from your clients, do they have someone who's going to give them a gift, a cash gift to close? We're going to need to have gift letters. We're going to need to see if they have already given it to you. We're going to need to see the bank account that it landed in. So these are different one-off documents.
You got your makeup on?
Yeah, happy Valentine's Day, okay.
Ready today.
Y'all supposed to let them down. Don't worry about me.
Yeah, the purpose today.
But it's been excellent. They down, everybody.
No, I was just like, thanks for, because I had.
About that. Right, and we're back. Documentation for gifts. They're going to need to fill out what's called a gift letter. So you can kind of give them a heads up on what that documentation would look like. Most importantly, we need to see the origination, where the money came from. If it comes from your mom, we might need her bank account. So here's $20,000. Here's the gift letter, and here's the $20,000 that was deposited into my daughter's bank account. Or they may actually send it right over to the title or the closing attorney. As you can see, everything on this 1003 is going to be about documentation, and this basically allows you to interview them, because if they indicate in their bank account that they don't have any kind of funds, then we need to know, well, how are you going to close this? If we're able to get a down payment and the seller does not provide closing costs, where's that money going to come from? So this is where you really kind of need to drill down and find out before you place them before you start engaging them in our loan operating system in terms of a application, we need to find out where the money is. Where is the money? Where's this money coming from? Because right now in this market, because the interest rates are high, I have seen to where the realtors are able to get closing costs, but that's not a guarantee. And so if they have no money and they don't have someone who's going to give them a gift, we're able to get down payment, but we're only able to get 3.5%. Where's the additional funds going to come from? And if we don't have an answer for that, then this may not be the time for them to be shopping for a home. They may need to start saving for a home. They may need to take their tax refund and start using it to build up an account to purchase a home. Right? All right, these declarations, we're doing good on time. These are very important. You need to pay attention. Okay, are you going to occupy the property as your primary residence? We'd like to see a yes here. If it's a no, then we have some questions to ask. Well, if you're purchasing and you're not planning on occupying the property, then, and you put no here, maybe it was a mistake. We need to know because loans, single family residence loans, and even up to 2 units are based on single family occupancy. If it's going to be an investment property, then we're going to rate you as we're going to re-rate that loan as an investment property, and we're going to have to take you to a different loan product. So there's nothing on this loan application that's here by mistake. So you have to really look. Are you borrowing any money for this real estate transaction? We need to see that as a no. We don't want you to go out and get a payday loan just to pay for your closing costs, because now you just effectively just increase your debt to income. You just basically created a liability. All right. So as you can read through there's some questions that should be all no. Here's another area where I need to zero in. Is there outstanding judgments against you? Delinquent on or default federal debt. If we're applying for an FHA loan and you're behind on your student loans, we're going to pull reports, and basically we will know that you have that you're in default. That's going to be a hard stop on your loan until you engage the student loan servicer and bring that student loan back to status that doesn't look like default. Okay, so debt cleanse can probably help them with that process. We need to know, are you party to a lawsuit, because that could cause garnishment of your wages. So that's why we're asking. Foreclosures, there's a certain time period that needs to elapse before you apply for government loans, and it's usually 7 years. Short sales, bankruptcies, there's a certain time period that needs to elapse between on bankruptcies that we need to see before we start putting you into a government loan. Conventional, definitely going to be taking a look at that as well. And even aside from the time periods, if someone just filed bankruptcy 3 years ago, then you need to drill down on, are you okay? Is everything level? Have you resolved? This is not your season to purchase a home. Like I said, we're not here to try to shoehorn everybody into a home, because numbers wise is not going to make a difference if the numbers don't work. If you're under a lot of debt and that's why you had to file bankruptcy or you went into a foreclosure, you guys are the consults. You guys are the advisors out in the field. Just talk to them like regular, normal, everyday people. They are, and you'll never go wrong if you use this 1003 as your guide. Not, well, I think I know it, and I'm just going to just toss them into my POS. That's not acceptable. We don't do that. We are going to use this every single time. Practice, drill, rehearse, because until you know this like the back of your hand, and you go through the documentation process, and you go through, okay, now I'm going to put this application into the point of sale, then it's not going, if you're brand new, it's not going to make sense. You're going outside the process. You're going to cause yourself a lot of frustration, confusion, and then you're going to get frustrated with the whole thing. All right. Demographics. They don't have to, you see a box here that says, I do not wish to provide this information. They don't literally have to provide this information. This area is not going to bar them from getting a loan. This is what the government uses to basically gauge who's applying for loans. How is the bank doing with regards to granting certain populations a loan? For example, Navy Federal and Wells Fargo got busted recently because apparently they're denying African Americans loans at a higher rate than other races. This is how they learned that. This is something that all mortgage companies have to report to the federal government. All right. That's pretty much it. Your information will go here. You probably, if I have you guys on paper applications, they can fill that out. You can add it before you send it to me. I will know, because if you are working with someone, I'm in communication with you, so they don't need to have that, but obviously they at least know your name. All right. Okie dokie. So I'm going to stop sharing my screen because I know that you all have tons of questions, or you don't, but I'm going to look for your raised hands. Questions? Everybody got it? What?
I have a question, but I can't find or locate the hand. I apologize.
That's okay. All right, Ms. Patricia.
You were saying like those COVID relief payments, how they apply them to the end of the loan. Do you have to request or that they be applied immediately? Or that's not like an option, they just automatically go to the end of the loan?
Yes. So how that works is if you got behind on your mortgage payment after COVID hit, of course, the federal government didn't want a bunch of people being kicked out into the streets, and now they're out exposed to COVID. So if you were behind, for example, 30 grand, they would just take that and they would automatically put it to the back of your loan. They were not, the homeowner did not have to pay on that loan. So sometimes they completely forgot. Then when we try to do a mortgage payoff, it may not even show up there, but it is going to be recorded on title. So there's nothing that you and I can do at this point. I wanted to make you aware that if you are dealing with a homeowner who is, okay, I'm buying a home, but I already have a home, I'm going to sell the first one and get into a next one. These are things that you need to be asking them. Have you ever had a partial claim through FHA? Have you taken advantage of some of the COVID relief? Because if so, then you need to get that information. You need to have them go dredge that information up right up front so that you can provide it to your realtor, because she's going to be doing a payoff and she needs to know what those numbers are. We won't get true numbers, but at least we won't be shocked by it when we get a little bit further down the line and we're under contract and trying to close it. Sense?
Yes, it does. Thank you so much.
You're welcome.
Hi, Gloria. I have two
Hey.
quick questions. So I went through your email and I saw where you said that the client we should email them to 1003. They should print it out, sign and date. Are they able to fill it out electronically and use an electronic signature, or does it have to be ink?
Actually, it does not. If you have I have been going back and forth with this. I've been actually looking for one that makes it easier for them. What we're interested in is the data, and we do need to have them sign it, because we will literally, what I'm going to do is when you have someone and they fill it out and it's signed and dated, then we're going to hop on a call and you're going to actually enter that into your POS. That's how
Okay.
I train you. Yeah,
Okay.
so
And
you have
I'm sorry.
It's okay.
And then the second question was, I know you want the 1003 back in a PDF email to you, but what about the attachments like the driver's license and social security card? Can that be in one PDF document, or should they be attached, separately in the email?
I would say separately, is because when you get into the process of uploading them in the back, it has slots: driver's license,
Okay.
social security card.
Thank you.
So yes, yeah, please don't smush all of your documents together. And also the naming convention, we're going to have a training on documentation. The naming convention, if the naming conventions are confusing, if you send a driver's license back and it says Doc 1, then now the processor or myself or you have to open it and, oh, that's the driver's license. So make sure that before you submit those to me that you check the naming convention and make sure the document is because it's going to prevent a lot of bounce back from the underwriting team. All right.
So my
Mr.
program's going to eliminate this.
Okay,
Yes. Good afternoon, Mrs. Gloria. This is Sherman Owens speaking.
I'm sorry, who?
Sherman Owens.
Okay, how can I help you?
Okay. I'm just want a little clarity on this one thing because I did a previous training, and in that training, they showed me specifically how our customers would go in through the Navy Federal website and fill out the whole application. And they said that in that training that they was able to sign and everything. And then in that, when they create the account, the customer would be able to upload all of their own documents as far as the credit, as far as all of the income documentation, as far as identification. So is that not correct now? And we still have to print out all of this and send it over to you, or not? I just need a little clarity.
On my team, because mostly everybody is new, you're going to be submitting that 1003. We're going to review it because let's just start from how we got here, right? Everybody here was able to come over without having to go through the state to learn your basic mortgage loan officer skill sets. So what happens is, I won't say we circumvented the process, but we kind of did, right? And so now once you come over and I'm training you, what I'm seeing is that if you circumvent the process again and just give them your point of sale, what have you learned? You don't know how to interview people. You don't know all of these different nuances that are going to come up that are going to cause you to just start tossing up a bunch of unqualified people onto your point of sale. Is going to cause an administrative stir for you, is going to cause an administrative stir for me. And what we have seen in the past is that while we're trying to weed through people who, low credit scores, DTIs are through the roof, then we can't get to the ones who are qualified. There's only one of me and hundreds of you.
Okay.
So the only way excuse me, let me finish. The only best way to train you is to take you to the basics. There's no circumventing the process on my team. Nobody here is released until we train over and over again. And then I can see that you have, you're adept at having good conversations with your people and asking the right questions, because I don't see the purpose of just throwing up a bunch of loan applications and see if it sticks. Our job is to put in quality loan applications, and for the ones that we are able to see through documentation that it's not their season to buy, then that's a client for you for debt cleanse, for credit repair, for debt remediation, for student loan remediation, or whatever you have found to be the case. It may just mean that they just need to wait. They just have everything else together, but they just don't have any money. It's not a good time for them. Or they just started a job or moved over to a new position. It's not everybody's time to purchase a home, guys. And so just handing out our point of sale links just to anyone and everyone, we need to kind of change the messaging, because when it comes over to the bank side, I don't know about you all, but you only have 24 hours in a day. You want to use that time wisely to make sure that if you are wanting to build a book of business that can actually close, then this is the process. You're going to have them fill out a loan application. You're going to have them submit all of your documents. We're not going to go to the point of sale until I review that information with you. And then I'm going to get on the Zoom. Then you're going to enter that information through the point of sale, because a lot of the applications that are coming through are crashing because the customers don't know what to put. They don't know that they need to put 3.5% closing costs in the portal. If they don't have 3.5% closing costs, they absolutely are just going to put exactly what they have. But guess what? That gets stuck in the point of sale portal, and it never even gets over to me. On one of our next calls, I'm going to show you the loan operating system that I am in, so you can see what it's like on my side. This is a business to where we're dealing with people who are purchasing the biggest purchase of their lifetime. It's showtime. It's go time over here, and it's showtime. And so I guess I should say it may be showtime on the own easy side, but over here, this is where the rubber meets the road. This is the process until I know that you and I have spoken several different times, and I know that you are actually consulting with every single one of your people, because I will know based on us having a one-on-one conversation and where you present to me your client. So yes, so when you get a 1003, I'm going to ask you to present your client to me. Tell me, and I'm going to ask you questions. And if you're saying, oh, well, I didn't ask that, oh, well, I don't know the answer to that, then I know that you just gave your 1003 to them and they filled it out, and that you don't know enough about them. And is what you don't know is going to crash and burn your loan, and you're not going to be able to get to a closing table. Hope that answers the question for everyone.
Okay, could I speak now, ma'am?
I'm sorry?
Could I speak now?
Sure.
Okay, great. With everything that you just said, you are absolutely 100% right. But however, me and you might need to get on another Zoom call where we do that one-on-one, because I'm a local investor. I deal with other real estate investors. 90% of the loans that I'm pushing through is from investors that's doing fix and flip deals. So we might need to get on that call, because I'm not the person that's looking for the single family home. So none of my people is that.
Yeah, and yeah, we will need to get on a call because it's getting up to the 3 o'clock hour, and you may be you may have a different set of circumstances. However, the process is still going to be the same, and there's no circumventing the process. That doesn't mean that the investors are going to fill out the application, or you're going to be able to get the correct, because actually it gets a lot more complicated when you're dealing with investors. If you've never been a mortgage loan originator. So we can talk about that certainly on a one-off. All right, Ms. Charlene, hope that helps. Charlene?
Can you hear me now?
I can now. Hello.
Yes, I'm sorry, I was muted. My question was, do you recommend any other streamlined process that we can use to assess the applicants on the 1003 application?
Okay, so can you restate that?
Sure. So so just aside from us assessing the application with the loan applicants, do you recommend any other process that we can do to kind of filter out the best applicants to move on, or is it just kind of us marketing and seeing which application or who would be best fit based on the information they put on the application?
Yeah, this 1003 is going to be your Bible. This is what we use in the world. So if we use the loan application, the data from it to approve, then I don't know of any other. I don't know where else could you go to get more specific. We're going to keep training on this, because there's, like I said, if I were to get off of this call and do a mock call with you, and I pretend to be the applicant, and you don't ask me certain questions, then I'll know that you're never going to get to quality loan applications if you don't know the quality questions you need to ask. This is your guide, what you use to interview people. Stick with this, then there's not, the only thing that's not on here is credit. When I print these out, when I first started, I would print them out, and then as soon as I got on the call, hey, Mr. Smith, so glad you wanted to apply for a loan. and I thank you for considering me as your mortgage partner. Let's talk about your credit, sir. Sir, what's all three of your credit scores? And I'm going to just listen, and then I'm going to have him pull that. I'm pulling blood, I'm pulling urine. Then after that, then we're going to go through this, and then I'm going to send it to him, and I'm going to have him fill it out. It's a process. If you go to the left or you go to the right, you're going to have gaps of information. In those gaps of information is where your loans are going to start to fall apart before we can even get to pre-qual based on the data.
Okay. Is there a training? I'm sorry. I was just going to ask if there was a training that we would be doing on like the the letter of explanation, like when we send that in with certain things, just how to know what to send that in with, or if it's just kind of up to our own discretion.
Okay, so letters of explanation only arise as we need them. So
Okay.
on the initial loan application, we just need the data to get started. If you're talking to them and you see where they have had like a huge gap of employment, like 2 years, let them know that they're at some point going to have to provide a letter of explanation in writing, but you are going to want to ask them what is going on. So in terms of the initial documentation, it's sort of like the first wave of information. If we can get past the first wave, your income, your liabilities, we pull credit, we start looking at the area where they want to buy, we start pulling the taxes in that area to assess what your loan payment is going to be, then we can always come back to see, okay, if you are able to document some solid income, what happened with this 2 years? So letters of explanation is further down the line. You just need to make them aware, and you need to know for yourself what's going on. Sense? All right.
Hi, I have a question.
Let's have a
So
look at.
yeah, for the self-employment, they need to have 2 years of documentation of employment, right? Like two tax returns, 2 years of tax returns.
So are there two different questions you're asking? Because so the past 2 years of tax returns. Yes, so I'll answer the last one.
Yeah, for
This is
yes, if they're self-employed.
if they're self-employed. Yes, we need 2 years of business and personal.
Okay, thank you.
You're welcome. Everybody else good? Guys, we're going to keep doing this. And okay. We're going to keep doing this because, like I said, this is what's basically going to train you. There are some people that's on the call with me now where we have gone through this process, and it may seem like, well, it's arduous. That's not what I heard when I was over at Debt Cleanse, but this is not Debt Cleanse. This is Capital Federal Mortgage, and this is how I'm training you so that you can know. You want to know. What I'm hearing a lot. I see you, Miss Shanika. Well, hold on just 1 second. I'm hearing a lot of people saying that I don't know what I'm doing. I don't know what to say. This is how you will learn what to do and what to say. Is every single time we get a different client, you're going to learn something more. You are not going to learn this business overnight. You're going to learn it application by application. What you're going to get really good at is not putting in just an application and trying to see if somehow or another we can work a miracle to get this done. Okay, this is not what we do here at Capital Federal. We need the documentation, and we need some documentation for giving you hundreds of thousands of dollars. Okay, so this is the way that I'm training on my team, and I know that it works. I know it works, and I know that you're going to be you're going to look up 6 months from now, and you're going to be putting up quality loan applications just on the basics. If you are brand new and you don't know the basics, then you're going to be intimidated to even sit down and talk to someone. You're not going to want to get on stages. say your church finds out, hey, I've been seeing your post on Facebook. You're saying you're a federal mortgage loan originator. You want to get up here and do a home buyer seminar, you're going to automatically start having heart palpitations because you don't know the basics. This is kindergarten. This is square one, where you're going to learn the basics. Then we're going to graduate you as we go. But for the next foreseeable future, is going to be 1003 trainings. We're going to get more into the weeds, and we're going to have some calls I'll start to send them out. I'm going to send them out to your personal and your bank email, where we're going to go over affordability calculators, right? Because you're seeing a lot of people who are telling you, I want a $300,000 house, but their documents are telling us they can afford $150,000. Okay, so you need to know what that means. And if you're not getting these documents from your clients, looking at them yourself, and we're getting on the call talking about it, and then I take you to the LOS to show how it calculates things like debt to income and how those affect your loan amount, then you're just going to have the title of federal mortgage loan originator. And I don't think anybody here came to this company just to walk around with the title of federal mortgage loan originator, but I think that you guys want to actually learn how to do this business, right? Okay, Miss Shanika,
Absolutely.
your hand is still up, Shanika. I didn't know if you had an additional question, but guys, I'm here for as long as we need to be here to ask questions, and there's no crazy question, because this is all going to seem crazy to you until it doesn't.
Yes, ma'am. I have a question.
Sure.
Okay. First one was, let's just say a client has property, but they're not renting, or they don't earn rental income. Is it required or necessary to include that on the application?
Okay, you're a little bit muddy, so I'm not sure what you're saying. You're saying that they own property?
Mm-hmm. Yes, ma'am. Own property, but they don't
So
earn rental income.
okay, so let me restate. They own a rental property. No one is living there, or if they are living there, they're not earning any rental income that they have documented through taxes.
Right.
Well, then
Correct.
so tell me your full question.
Okay. Can you hear me now?
Yes.
Okay. So that was correct. The person owns property, but they're not earning rental income from it. So that means they don't claim it on the tax return. Is it necessary or required to be included on the application, the 1003 application?
Is there a mortgage on said property?
No.
Okay, so if they own it free and clear, the reason why
Mm-hmm.
we're asking for tax returns, payment coupons and things is because if they own a property and they did have a mortgage on it, they're responsible. That's a liability that we have to assess them with. It's going to go into
Right.
their debt income calculations. But if it's owned free and clear, then we definitely need, there is a space on the 1003 application where they would be able to include free and clear. However, they still are on the hook for taxes and insurance if it's a residential property.
Right. Okay. So they do have to
Yeah,
include it. Okay.
so we have to. If it's land, we don't need it, but if it's a residential property, we definitely are going to need to see the homeowner's insurance of the latest declaration out annually and what the
Oh,
property taxes are. We're going to take those figures, divide it by 12, and we're going to come up with a monthly amount that they would be responsible for that home, even though it's vacant or whatever the case may be.
okay.
Got it?
Yes, ma'am. Thank you.
So guys, put in the chat the different things that you, different trainings that you may want to learn. I know we're going to go over the ones that I think you guys really need is the affordability calculator, because just being able to have this at your fingertips is, when people are telling you, hey, I want a $300,000 house, then you can kind of put that in. How much is your income? These are just things that we're going to be doing later, right? You can find out what their total gross monthly household income is. You're going to put that into an affordability calculator in the city and state where they live, and it's going to give you a general idea of what they can afford. At 7%, people are just shocked that, oh wow, because they're used to back when COVID was going on and people were, their cousin or their mom or dad or whatever got into a home at got into a $500,000 house with a 2% interest rate. Of course, if the interest rate is lower, you can afford more house. So right now, we decided to start this company right in the middle of the highest interest rate season that it has been for a while, right? That along with a reduction in inventory. So inventory is not all that great because sellers are sitting on those houses because they don't want to give up that 2% to go jump into a 7%, right? So we have a reduction in inventory, the highest interest rate. Affordability is at an all-time low. A 7%, inflation is at an all-time high. So now is the time to where you really need to know what you're doing when you're out here in the field talking to someone, right? You need to know, okay, people's perception of what they think they can afford is completely skewed by what they have seen happen in the last 3 years. The Feds actually raised the interest rates to put a stop to that. So in this market, if you can survive this, then when the rates do come down, housing inventory increases and not the interest rate, inflation comes down and people can afford more, then you're going to start to really see a lot of people jumping out there. This to me is a season where people, if you're talking to 10 people, 8 of them need to wait. But what I tell people is tell them not to waste their wait, right? What are you doing in the meantime? This is how I literally talk to people. Hey sis, this is not going to work. We need to work on your credit. And in the meantime, I need you to go get you a side gig. You don't get to just come home and just cool your heels. You need to be working a part-time job and you use that income. We may not be able to use that income for you to purchase a home, but you're going to use that to pay down some of this debt that you have. We need you to get out of debt, get your income, get your bag up, get your credit scores up, the highest that they can go, because you're going to rule yourself out of programs with a lower credit score. So this is what I mean by consulting with them and telling them, don't waste your wait. What are you doing? You're just sitting there just waiting on what? And then when we get to the point to where, okay, you did increase your bag, but you didn't work on your credit score, now we can't even get you into a home because you don't even meet the bottom threshold, which is 580, to even get into a home. So you're going to have to kind of take control of the conversations. Don't let them come to you telling you what they want and yeah, I know my credit isn't good, but let's just see. Let's just try it. What's your application link? Let's just see what happens. Don't do it. Not on Team Simmons. We don't do that here. We're gonna pull some blood. We're gonna draw some urine. I said that backwards. Either way it goes, that 1003 is gonna tell us, and we're gonna get on a call. And it usually averages out to about 8 people that you're talking to out of 10 are not ready to buy for any number of reasons. Student loan debt, it scares the crap out of me. I looked at a file yesterday, 12 student loans deferred. If that ever comes out of deferment status, I'm still structuring that file, I'm working on it, but if they ever come out of deferment status and those payments start hitting, it's going to be bad. And so these are things that, that we just kind of are in that season where we have a lot of different moving parts, and you guys have jumped out there and taken the boldness to federal mortgage loan originator. But my goal is on my team, on Team Simmons, you're not just a federal mortgage loan originator in name. I don't want you posting on Facebook and recruiting, but then you have not even done any loan applications. I promise you, if you start talking to people, you start engaging with me, answer your emails, and we start having these conversations and you get on these trainings and you prioritize these trainings, then you're going to start talking to people. You're going to have activities and you're going to be able to say, hey, I got my first pre-qualification. Hey, they're pre-approved now. Hey, we're under contract. Hey, we're heading to the closing table. You won't have a problem recruiting. People like to see activity. People like to see results because they're seeing it. We're all over social media now, right? We're all over social media. But what they don't see is who's closed the loan. Who's closed the loan? It's time for us to close some loans, and this is where it starts. Okay? All right. So let's see. I'm looking at your questions in the chat. I understand the 1003. I need a better understanding of the loan types for an example, 203K. All right. We'll have a call about, I'm writing it down, programs. All right. And this is Ronika that asked that. See, Ronika is the head of, Cassia, Ronika that I can see on the call are kind of ahead of you all, unless you did something with a prior loan buddy. They have already gone through this process. They understand why we needed that 1003, because if I got the POS and I didn't have the 1003, a lot of these pre-qualifications that they had, I wouldn't be able to do a thing with it because the POS just kind of leaves a lot of holes that I need. And so Ronika's out shopping for a home for her client, right? And so now she's a little bit more advanced than you all, and I can talk to her about programs because she has gotten down the basics. So you're all going to be at the rate of speed at which point that you start engaging me about a 1003 in the loan application. Something, if you just toss up, give your link out to someone, and I look on the back portal and I see someone and I see your name and I have never talked to you, you are doing that client and yourself a disservice because you have not properly consulted them and set expectations. So this is our process. It works. It's going to help you. You're going to feel so much more confident when you're out talking to people. If you go through this 5 times, 10 times, you're going to be on stages doing home buyer seminars. You're going to be amazed at the things that come out of your mouth because you didn't circumvent the process. So, awesome, guys. Affordability calculator. That's yes, Ms. Casilla. That's something that we're definitely going to be doing. I'm going to be we're going to do some mock calls. I'm just going to randomly call you off mute. Hey, interview me as a client, and I'm just going to be a pain in the rear, and I'm going to be withholding all type of information because that's what your clients are going to do. They're going to withhold information because they don't think that we're going to find this stuff out. But this is what you're dealing with. They may not be a pain in the rear, but they just don't want. They're so paranoid. They're just thinking, well, if I tell her all my stuff, then I'm not going to get a loan, and not realizing we're not the one who's turning them down. The data is. All right. So I'm looking for questions. Affordability calculator. We're going to be walking through doing initial consultations. What is that like to get on the phone with someone? We're going to talk. We're going to have a call about credit. So we have some training calls coming up. Let me look at my notes. I know I wrote myself notes on different things that if I was brand new, I would definitely want to know. And I think it is those things that we just talked about. Hold on, let me pull up my. With this, guys, and I have here. Yeah, the initial consult, the amortization schedule. Why am I going over who knows what put an A in the chat if you even know what an amortization schedule is. Curious. The reason why we need to go over the amortization schedule is that you guys have probably heard the buzzwords out in the market, which is date the rate, marry the mortgage. So we're going to go over an amortization schedule to see why for some people that's just not a good idea, and who needs to date the rate and who needs to marry the mortgage, because we don't want to just sound like parrots out in the marketplace saying what other people are saying without any intelligence behind why we say it. So I'm going to have a call about an amortization schedule and what happens when someone dates the rate and they refinance, because that's what it means. Dating the rate means I'm just in it for the short term, but we're going to really take a look and see what happens if at year 3 you all of a sudden refinance out of that. So I'm not going to go into it now, but like I said, I want you guys to be out here with some intelligence and to know, because somebody's going to call you to the carpet on that. And I don't want you to get caught off guard by not knowing what it is you're saying and what that means. How do the numbers break down on that? So we're going to be talking about that, how to work with your realtor partners unless you are a realtor. But even if you are a realtor, you may be licensed in Florida and Georgia, but you may be working on something in North Carolina. So as a mortgage loan originator, it's a different thing. You can't talk to them like another realtor. You have to now put your mortgage loan originator hat on and tell them, hey, I'm sending this approval over. What do you need to be telling your realtor partners, and things like that. But if you're definitely not a realtor, then you're going to need to know how to talk to your realtor partners. Document submission, how you submit those documents to me, that's coming. Response time and follow-up. When we're working on a mortgage, everything is about timing. There, especially once we go out on contract, you can't disappear for 24 hours without checking your emails. I don't know what is going on back and forth with tech in terms of Capital Federal. I can't have those conversations because unfortunately I am not the person to talk to about tech. However, I have sent out some the latest information that I know how, that I have access to on who you contact for tech. That's not me. Training on using the system, if you're talking about the point of sale, that's not me. We have trainers for that, right? The only time that you will be getting training which involves the point of sale is when you have a viable loan application. We've talked about it. Then we're going to get on the Zoom. If you don't have access to your point of sale, you're going to use mine and you're going to be putting in that loan application. That's going to be your training. Just randomly training on using the system. We have trainers in place for that. And if you're checking if you don't have access to your bank email, then I don't know how you're getting the updates on that. However, do everything you can to get your bank email going. Knowledge base for guidelines or marketing materials. SCU, logo, etc. That's probably going to be in Teams. I will have to search that out. Marketing materials, that's probably going to be on the debt cleanse side. The CFCU logo, I just snagged mine and just turned it into a JPEG and put it in Canva and did whatever I needed to do. But as far as your marketing and all of that, you own this business. So that means, here's one thing I want to help you guys with is don't just rely on our calls. YouTube University, that is a content-rich platform. If you go in there and you put in, how do I grow my mortgage business, you're going to get so much content. So guys, tap in. Don't just tap in here. Take ownership. This is your business. You signed up for this to be profitable, right? And so go to YouTube. While you're riding around, or if you're cooking, I have my husband set my speakers up in the kitchen. That's when I put on my trainings or different things. I learn as much as I can about this business because it's in flux. There's different things going on. Guidelines are changing. Programs are ending. Programs are coming out. Interest rates are high. They're going to go down, and there's going to be more programs. I don't just sit back in anything that I do. I'm a realtor in 2 states. I'm licensed as an insurance agent in 9 states, and now 50-state mortgage loan originator. I don't take for granted that I know anything. I am forever learning, and I want you guys to take that same mindset. All right, Cecily, I was told that since I'm in Virgin Island, I can't loans for people here, but I need to know if I was reinstated into the system. That's not a Gloria thing. You're going to have to get a hold of Debt Cleanse. I don't even know what a POS system is. You're going to probably want to contact your upline. These are things on the Debt Cleanse side. This is the bank side. So 2 different sides. I'm also on the Debt Cleanse side. I'm a national advocate over there. I haven't done anything with it for a couple of weeks or so. But Cecily, those are debt cleanse in your upline questions. If you're a part of different chats, get in there and ask them about that type of information. I'm sure they're more than willing to help you guys. All right. All right. We have gone over, but this is so good. I'm so excited for you guys. I don't know how many people are on here, 25. Listen, there's 100 people on my team. You're the mighty 25 today. Okay. So we're going to learn and we're going to grow in this business together. I'm going to help you. I'm not saying I know everything. I'm just saying that I'm going to give you what I do know, and I do know the basics. I do know how to talk to, I do know how to talk to people to at least get the information that I can get them started. And so you go out there and you slay them, you clean them up and send them over to me. Then together we will be able to hopefully get them to the closing table, not before. Right? 5 strong. That's right.
Hey, sounds great.
All right. So I want you guys to enjoy
Thank
your
you,
Valentine's.
Gloria.
You're welcome,
Thank
Miss Eva.
you. Hey.
Well, enjoy your Galentine's Day. Just realize that, you know what, no matter what, God loves you. And I'm so proud of you guys for showing up for yourself. We're going to keep having these calls. I'm going to start doing some in the evenings. I'm trying to figure out what times Debt Cleanse Own Easy is having their calls so you just don't get completely overwhelmed. However, we're going to learn some stuff. And I want you to put your MLO t-shirt on with pride. And I look forward to seeing you guys on the next call, okay?
All right. Thank you.
Okay, thank you.
Thank you. Have a great day.
Thank you. Can I ask
Awesome
one more question
training.
before we hang up? Can I ask
Have a
another
good day.
question before we hang up?
Oh, yes, Miss Shanika.
Yes, ma'am. Okay,
Yes.
just to make sure I'm understanding. So right now, since we're going through the paper application process, are you expecting us to still go through, like, have an intended product that the client wants to apply for and its expected amount, loan amount, or is all of that decided upon after the review of the
Yes,
application?
yes. Yeah. Before we get into products, we're going to start out. I start off most people with a FHA until they tell me differently.
Okay.
It's because the lowest, you're going to have the lowest down payment that I have seen. However,
Okay.
if there's no circumventing this, this is where you're going to be able to look at them on paper, and you're going to be able to make some decisions about should we even go to the next step.
Okay.
So, yeah, laser focusing on this, talking to them, finding out where they are in life, what their goals are, why they're moving, why they want to buy a house. All of this factors in because someone may be in a situation where they're in a rental and someone is selling the house. They're renting somewhere. It's the landlord is selling the house. That doesn't mean you jump up and buy a house. It may just mean you need to go find another rental. So I don't want anybody putting pressure on any of you to resolve their life issues. Buying a house is a serious thing where you need to be financially stable and capable of not only buying it but maintaining it.
Maintain.
That's
Right.
process. Yeah, that's what this process is going to flush out. It can't be a knee-jerk reaction. Well, I'm leaving my husband, so I'm just gonna go out here and buy a house. No, we need to we're the first line of defense to let them know that we're not just going to just toss you into the system. Like I keep saying this, but we're not just going to toss people into the system to see if it works. We're going to consult with them and put them in the best possible position. And if that's home ownership and your numbers justify it, then we will absolutely help anyone that we can to get into a home, even if we have to manually underwrite. But you still have to be able to afford it without having, every single month the mortgage payment is like a burden to them because we just shoehorn them into it.
Right.
So you're gonna learn on paper what that means. So I'm just excited for you guys. So any more questions? I'm gonna go ahead and end it.
Okay. Thank you.
You're welcome. I did record it, and I'm gonna get this emailed out to you guys.
Okay,
I'm gonna
perfect.
have to I'm gonna end it, and then give me until tomorrow morning, because I know my inbox is probably blowing up. Have a great day, everyone.
You too. Bye-bye.
Okay, bye bye.